I'm Adam, and in this video series I'm going to be taking you through how to create your first client in Truth. In our last video, we looked at how to create clients, how to navigate Truth, and how to work with assets in the net worth statement. In this video, we'll look at the income and expenditure statements. We'll also cover how to create, edit, and apply key dates, which help you dynamically change your client's cash flow in meetings. Let's get started. This is Kath and John Smith, the clients we created in our previous video. Our template has already given us a couple of items which can generate income: employments and state pensions. As our template includes state pensions for both client and partner, these have automatically been created for us with the start date of the client's calculated state pension age and a full state pension entitlement. If you have a BR19 for your client and they aren't expecting a full state pension, you can simply overtype the income figure. If your client is self-employed, you can simply add a self-employment item by clicking on Employments on the left, then Self-Employments, then clicking on the blue plus sign. In this case, let's use the employment item from our template. All we need to do is input a salary figure as well as any expected bonus income. Note our template has an assumption that income will increase with inflation. We can have a look at the impact of changing this later. The only thing we're missing here is a date employment ends. Perhaps we want to assume Kath works through to state pension age. Perhaps she's thinking about giving up work earlier. For now, let's use her age 65. Remember, we can type a date in the box on the left or an age in the box on the right. Let's take a look at how that impacted on Kath and John's income statement. As we saw in the last video, to open a statement, you can simply choose the appropriate shortcut from the planning menu at the top of the screen. In this case, we're looking for the blue bars going up, which indicates the income statement. We can see the figures we've just entered pulling through here. Just like in the net worth statement, we have the option to display some nice visuals on screen. Let's turn on the pie chart showing the breakdown of the current year's income. And let's also turn on the bar chart showing the client's lifelong income. These lifelong charts are a great way of sense checking the data that we've input into Truth. You may recall from our previous video that we decided to sell the client's main residence at age 85. The spike we see here is the equity released from that property sale. To give a better picture of the client's regular or ongoing income position, we can click on the funnel icon on the left. As the caption says, this filters out one-offs. This can be particularly useful, for example, when clients are anticipating a large inheritance, selling their business, or taking significant pension commencement lump sums. Note when we click on this option, a helpful caption is added above the income statement, reminding us that we are filtering out one-offs. The lifelong chart is now starting to reflect the narrative of our clients' lives. John is 5 years older than Kath. Kath is working through to age 65. But a few years earlier than that, we can see John's state pension coming in. As we're only projecting up to age 100 for John, we can also see that his state pension income disappears at Kath's age 95. From that point on, Kath is relying on her state pension alone. We previously specified an end date of Kath's age 65 for her employment. What if we wanted to make this a flexible date and show Kath the impact of retiring at 64, or 62, or 60? Truth makes varying dates really simple by using key dates. We can view amend and create key dates via the Settings menu on the Planning toolbar. This table displays the key assumptions that we selected on the new client screen. This is where you would go, for example, to amend the inflation figure in your model. For now, we're interested in the final two columns on the right-hand side, retirement and later life. These are what we call key dates. They've come from our template, and we actually chose a key date for retirement on the new client screen. We can edit any of the figures in this table by clicking on them. By clicking into the retirement key date and pressing the C key on our keyboards, we can bring up the date calculator. And we can see here that the date selected is already Kat's age 65. Every model in truth will always have at least two scenarios, one indicating the client's current position and another indicating a hypothetical scenario or what if. We'll take a look at scenarios in more detail in a later video in this series. For now, the important thing to note is that our key dates can have different values in different scenarios. Our template also has a second key date called later life. Just like our retirement key date, this can be used to control all kinds of assumptions, such as changes to expenditure towards the end of a period of active retirement. While we're here, let's change this to Kat's age 85. Whenever you change settings, make sure you click the OK button in the bottom right to save your changes. Now let's have a look at how we apply these key dates to items. Remember, tabs you have open in Truth can be selected, just like open tabs in your internet browser. We can return to the fact find by clicking on the fact find tab. Back in Kat's employment, as well as entering a date on the left or an age on the right, clicking on the drop-down arrow to the right allows us to select from our available key dates. Choosing our retirement key date will not only allow us to vary Kat's retirement date dynamically from the cash flow, but, as we've seen, it will also enable us to have Kat's salary end at different dates in different scenarios. Using key dates also helps ensure all our assumptions are aligned, as changing a key date will change the date for all items where our key date has been applied. Before we move on to expenditure, it's helpful to understand where expenses can come from in Truth. We can input as much or as little detail on a client's spending as we like. We are in control of how much detail we decide to drill down into and can vary this client by client. Many items on the fact find can generate expenditure. For example, children can be the source of childcare costs, school fees, and house deposits. Mortgage payments can be input against a client's mortgage. This is preferable to just accounting for the expense, as it also serves to reduce the mortgage debt over time. Motor vehicles can have costs associated with them. We can also input premiums into policies and contributions into investments. As well as costing the client money, these expenses will grow the relevant asset. For anything that doesn't fall into any of the above headings, or simply to input broad stroke figures, we can use miscellaneous expenditure items. Our template already has two miscellaneous expenditure items, one representing their discretionary expenditure, such as holidays, hobbies, and other lifestyle spending, the other representing their essential expenditure, such as bills and other committed spending. Let's have a look at the essentials first. While it's perfectly fine to enter annual values for expenditure, we always recommend converting these to their monthly equivalent. If your client retires partway through a tax year, their salary will stop on that date. If their spending happens annually, changes won't take effect until the following year. So let's put in a figure of £2,000 a month for essential expenditure. Note that this figure will continue automatically until our retirement key date. This has been pre-populated for us by our template. The thereafter expense below allows us to vary their spending in the future. We could say, for example, that their essential expenditure was going to rise or fall in retirement. For now, let's assume that it stays the same. We can also specify here a rate of escalation for our expenditure. Let's assume our spending will increase with inflation. Now let's enter some information about Kath and John's discretionary spending. Let's assume a simple 50-50 split between essential and discretionary expenditure, and enter the same £2,000 here that we entered into the previous item. As this represents Kath and John's discretionary or lifestyle spending, we might want to assume some changes in retirement. They might want to spend more. This could represent going on more holidays, eating out more, or gifting more. Based on our conversations with Kath and John, their desired retirement lifestyle is likely to cost them £3,500 a month. But there will inevitably come a time when active retirement ends. At some point, Kath and John's spending might decrease. We can accommodate this by using the second thereafter expense below. Let's choose our second key date, later life, as the end for our active retirement spending. And let's assume that, from this point on, they spend a more modest £1,500 a month. If we wanted to do so, we could also input an overall end date at which the expense comes to a complete stop. Now we have some details about Kath and John's current and planned spending. Let's take a look at how this information pulls through to the expenditure statement. You can find the expenditure statement on the planning toolbar, symbolised by the red bars with the arrow going down. Note, as well as the figures we've entered into our miscellaneous expenditure items, Truth is also calculating Kath's income tax and national insurance liability for us. Just like we did with net worth and income, let's turn on the pie chart to show the current split between tax, essential, and discretionary spending. And let's turn on the bar chart to show their planned lifelong expenditure. Now we can really start to see the narrative emerging. We can see that Kath and John's essential expenditure stays the same throughout, while their lifestyle or discretionary costs increase during active retirement, but then decrease in later life. We do have one further figure on this statement: main residence household expenses. Once again, this has come from our template. As we've already seen, adding different categories of expenditure can really help build the narrative behind our model. Let's edit this £1 figure. When we looked at the fact find, we saw a number of different items that can generate expenditure. This expense has come from our main residence. To view expenses associated with this property, we can click on the Personal Expenses tab. Once again, we can enter as much or as little detail here as we want. For example, we could input separate values for the utilities and council tax for this property. If the client has multiple properties, we will see these itemised on the expenditure statement. Note, these expenditure figures should be entered annually. But don't worry, Truth will prorate spending if you buy or sell a property. For now, let's just input a value of £10,000. Back on our expenditure statement, we can see that we now have a fourth category of expenditure. We can also see that the household expenditure stops at age 85, when our main residence is sold. In this video, we've covered how to use the income and expenditure statements. We've looked at items that can generate income and expenditure and how to input these. Of course, if Kath and John sell their main residence, they will need somewhere to live. You may also have noticed that their current income in retirement is very unlikely to meet their spending goals. In the next video, we'll take a look at pensions, how to input a simple downsize, and, of course, we'll take a look at Kath and John's cash flow. You can watch that video now by clicking on the link in the description or the link on screen. Thanks for watching.